Hey, welcome everybody. Martinis with Scott on YouTube, Apple Podcasts, and Spotify. Hope you've had a great week. Welcome to a Thursday afternoon. Cheers. By the way, if you're on the podcast, I'm drinking a Lefroy 10-year again, a Scotch. I'm on a Scotch kick, and I'm thinking maybe I need to change the name of this show. Maybe not. I'll go back to martinis sometime soon. You know, the truth of the matter is that if I have a martini, I usually have two. And then I'm just done for the rest of the day when I go have a nap. Whereas I can just tinkle on my, is that the right word? Tipple? Tinkle? I don't know what the right word is. Sip at my Scotch for, for a while, for the afternoon on a Thursday evening and still be productive. And also I'm just enjoying it. Cheers. Yeah, I recognize by the time this is uploaded, I'm probably a little bit late to the bar, so to speak. This afternoon, it's been a hell of a week. Been working around the clock, so I apologize for being slightly delayed, but hopefully it's not delayed more than half an hour to an hour. The theme for today's discussion is going to be around getting your house in order and the first rule of persuasion, which is someone has to pay attention to you, getting attention. Last week I talked about triggers in a negotiation. We'll talk more about that today. That's what I mean by getting attention. It's just, doing something that forces a conversation and sets the table in a way that's semi-favorable or at least fair to you. So let's dive into Novanni Stainless turnaround journey that we are on. This will be week 3 of the Novanni story. And to save you the trip going back, if you don't want to, Novanni Stainless is a terrific Canadian manufacturer of stainless steel sinks and strainers. It's been around for, I think, over 50 years. Sinclair Range, my company, bought Novanni Stainless roughly 3 weeks ago, maybe 3 weeks and change. Time is flying. And so I've walked you through the structure, I think, in episode 1 of the turnaround, not episode 1, but in the first segment of the turnaround journey. We talked about the structure of the acquisition, buying both the shares for the upside and buying the first secured debt for the protection and the ability to negotiate with other stakeholders in the business from a position of relative strength, because probably the company needs to go through a balance sheet restructuring as it comes out of COVID reduced operations. So that was the background. I won't, for those of you that are listening regularly, we won't go over it all again, but you can go back to the last 2 episodes. That was, number 1 and number 3 on this staged out journey for Novanni. And I think probably at the end of the first month, so after next week, I'll stop doing weeklies. Maybe we'll spread it out to every other week or once a month as, the rush of the initial part of owning a new business that is a troubled business starts to at least calm down and become a little bit routine. And we have our plans together. The first thing I want to talk about that's happened since the last show is we started to get some financial information in. And you may recall, I said, one of the reasons this company was in trouble is they hadn't done any real reporting since July of 2019. And if you talk to management at the company, they would say, well, that's not true. Everything's up to date, yada, yada. But if you talk to the stakeholders, to the lenders, they hadn't had reporting since, I think, March of 2019, at least their second secured lender, who I spoke with at length on this. And we weren't able to get strong financial information that was reconciled for due diligence. The bottom line is the company, their controller left, they didn't replace them. They were undergoing some financial stress. And, you have to have your house in order in business for a multitude of reasons. You cannot affect change without numbers, right? This all comes down to dollars and cents. How do you do better here? How do you better there? And if you don't know where you should be, where you are, and why you're not where you should be, then you can't affect change other than randomly affecting change. So you can't have a direction. You can't affect positive change. You can't head to where you want to go because you don't even know what's going on, right? You just have to have your house in order. And we don't at Novanni. So I think I'd mentioned I hired an external accountant as part of the due diligence process. And so we got December 2019 delivered to us this week. And I asked her to do December 2019. And I don't really care what it says. I just want the balance sheet sorted. And then rather than getting hard cut off and doing proper accounting for January, February, March, April, May, just focus on May 2020 and get the balance sheet right for that. Make sure the accounts are reconciled. And that way, March might be screwed up because some March entries that should have been done in March end up being done in May, but whatever. For the year to date, 5 months, we have a solid starting point. And then my team and the controller that I've hired to bring to work on Novanni as a primary file for her, we start June 1 on this. So we got both the December 2019 and the May 2020 delivered to us this week. And as I said, we take over in June. And, we've talked many times on this show about building the tools that you need to run a business, and particularly if you're trying to affect change and convince stakeholders of a direction you're going. And those tools include a rolling monthly model and a 13-week cash flow. And let's just focus on the monthly model for now. So what that is 3-5 years out, on all three of your financial statements, your balance sheet, your income statement, and your cash flow statement, with a series of assumptions, of metrics, of key success factors, which we talk about all the time on this show, which really drive the business. An example would be your contribution margin, or your direct materials, your rent, some of these key overhead numbers. And balance sheet assumptions are always a big one. How long does it take to collect your receivables? How much inventory are you carrying? And when you put that all into a model, and by the way, there's a template on the Sinclair Range website if you want to go find it. When you put that all into a model, you can see sort of like 3 months out, 6 months out, where are you going? Is this turnaround happening? And do I run out of money? What do I do about that? You can start making restructuring decisions, and you can put them in the model. If you don't have financial information, historical financial information, your actually accounting records, your model is crap. Okay, the way you build a model is you just don't make up ideas out of thin air. You take historical and you put them in, and you see the trends over time. Let's just say we're talking about how long it takes to collect a receivable. What good is it to put in an assumption of 45 days on your projection period if in reality it's 80 days on your historical? I'm not saying that's what's happening on Novanni, but there has to be, the reason you put it in your historical is so that you can see the trends and make reasonable assumptions that are extrapolated, which is why, take this away from business. Look at climate change models. Look at any sophisticated models with multiple variables going into them. If you don't have good data on historical, then you don't have reasonable data or useful data on the projection period. And that's not to say, if you look at the climate model, for example, it's not to say that the model doesn't show a direction, because it clearly does. But there's a reason that the outputs have consistently been wrong. And they consistently be wrong because there's too many variables, and we're not dealing with those variables in that scientific community, and because our historical inputs to this thing is crap, right? We're just unable to measure on a reasonable basis. Again, I'm not arguing the concept of climate change. I'm trying to explain that modeling requires historical financials affecting historical input. And in a business, that means historical financial statements. If you don't have your financials, you're not going to survive. As a business, do not cut on your accounting staff. It needs to be invested in, quite the opposite of what most troubled businesses think. And the troubled businesses, it doesn't have to be, it's any business. You need to have this. High growth businesses, people don't, when they're entrepreneurs, they don't invest in their accounting staff. They get some silly online accounting program which isn't kept up to date, and they don't use it as a tool. And by the way, you don't need a million line items of detail in your financial statements. Just hit the basics, but get it done, have it reconciled, make it right, or you're going to be in trouble. So I am particularly stressed out at Novanni over the fact that we don't have financials. And now I'm waiting for June. So I've got December and May, which makes me happy, although they lost a lot more money than I thought. Some of that could just be writing off old stuff on the balance sheet. And again, I'm not trying to change the past. I'm trying to know where we're going and make some decisions. So that is what it is. Now I'm waiting for June. It's already July 16th. So I think I ought to have those this week. And now we can start updating this model and looking at the things that need to be looked at, which I've talked about before. How do you make more money in a business? Contribution margin, overhead, revenue, in that order. So when I sell a good, when I sell a sink, I want to make more money on that sink. I could do that through higher prices, or I could do that through a reduced cost, and I manufacture them. So my reduced costs would include direct labor. And that doesn't mean paying people less. In fact, I think I ought to be paying people more, but increase productivity so I have less labor hours per unit. And a bunch of direct materials and a bunch of other things that go into the cost of me making a sink. And so that's your contribution margin, your overheads, and then go back to increasing revenue. Now we're in unusual times. We're in COVID, and so increasing revenue, if I improve my fill rates, they ought to bounce back, probably off the top of my head, maybe 15, 20% from where we are right now. And by the way, July is looking like a good month, certainly compared to April, May, June, which is cool. You can't make changes without numbers. If you don't know where you want to go and you don't know where you are, you're hopeless. You can't know what you're doing. And also, you can't communicate to others what you're doing. I'm on another file right now, and this is just such an astounding company. If you walk through the plant to see what they're doing, I can't talk to you about it, but it's such a cool business, and it got into some trouble, and then COVID piled on top of it. Why? Because of reporting, because of accounting, because of mistakes, because the department was poorly led, it was dysfunctional, it didn't get it was disjointed. They have multiple companies in multiple jurisdictions. They didn't get ahead of the issue, and it's 100% on that department and its leader, who, by the way, is no longer with the company, because my rule of turnarounds is to get rid of the guy that's not doing the job, as you already know. So Novanni financials was a big deal since we last spoke. Terminations I'm going to talk to you about two people that I let go this week, and I'm going to do it on a without prejudice basis. I don't know if I'm allowed to do that in a YouTube video. That seems crazy, and I'm sure my legal staff, not my legal staff, I don't have legal staff, but the lawyers that are following this podcast and show, of which there's many, will tell me I'm an idiot for trying to even talk about this and pretending that a without prejudice to my position is gonna help me at all, but whatever. I like sharing with you. So first person I let go was the former owner's son. So we bought the company, as I said, about 3 weeks ago. He, the 50% owner, was, and former president before I stepped in, was remote to the business. In other words, he just was never on site. And basically, to look after his interests, he had his son in there. And when I say his son, you think my immediate reaction was somebody who's younger, but in fact, the fellow's probably a decade older than I am, and I'm pretty old. He literally had no job. He was literally doing nothing of any substance that nobody else could do within the organization. And he was sucking out probably, I don't know the number, well over 6 figures a year. And so it just made sense. Like just in terms of cutting overhead and getting rid of the old guard, so to speak, cleaning house. So we let this person go, let the VP sales go. And I know you would say, well, geez, you want to invest in accounting, you can't cut on sales. And that's true. But the VP sales job is to manage a rep channel. And the rep channel hasn't been paid since March 2019, I believe. Anyways, a long period of time. This company owes a lot of money to its reps, hasn't paid them. We'll talk about that in a minute. And I like this VP sales guy a lot, actually. He seems like a very personable fellow. I met him on Zoom once, I think, maybe twice. And he seems like a good dude. He literally said to me when I first talked to him that when customers come and reps come with opportunities for us to sell some sinks to whatever construction project, development project, that he tells them to go buy from our competitors because we don't deliver. And the thing is, he's right. We weren't delivering. We are now. We fixed our distribution channel, as I talked about last week. But he seemed to miss the irony that I'm paying somebody well into six figures for to deliver the message to go buy from our competitors. Okay, so good guy or not, I don't know why I'm carrying that expense, because if I wanted to deliver that message, I certainly could do that by myself. I'm capable of delivering that message, and as a side benefit to this, I just need to know what's going on in our rep channel, which is a serious problem. And I don't know the answer, but I do know that if all of the communications are filtered through an intermediary, which is what this VP sales is, then former VP sales, then I'm not getting the direct goods. We need to take this department and take a step back and figure out what we want to do and how we're going to deal with the back debt issues. And then we want to move forward. And maybe there's an opportunity for a VP sales going forward. And so bottom line is I have no problem with this fellow at all. It's just a bad circumstance and we need to make some changes. So what do you do when you terminate people in this situation? 100% go to your lawyer. It's different in every jurisdiction. It's complicated. There's a system. You probably don't know what that is. You need good employment labor advice. There's both statutory, meaning codified in law, depending on your jurisdiction, like you have to give so much severance. And then there's, if you're in a common law jurisdiction, there's the courts that have said, yeah, well, it says to give them $100 in the written law, but the fairness of this, the equity side of this, the common law side of this is you need to give them $1,000, not $100. And so you need to understand that. If you're restructuring, I think mostly, certainly in North America, certainly in the jurisdiction that I'm in, always remember that you have to pay, right? So if they've been unpaid, that's a serious issue. It's probably a director liability. So you got to pay that. You have to pay vacation pay because that's part of their pay. But beyond that, all these big numbers of severance are what's called unsecured creditors. And we always talk on this show about the pecking order and who gets value first. Well, they come after the secured creditors, which in this case includes the bank, which in this case is me, because I bought the bank. It's Sinclair Range paid out the bank when they bought this company. And if we were to put this company through a formal restructuring in court, the severance that these employees would get would be zero because it's way underwater in terms of the value of their security package. And so they would get nothing if we were to do that, which I don't want to do, right? Nobody wants to go through that process if we can come up with a fair, informal way to restructure this. So what did we do? Actually, a third point about laying people off is everybody in a troubled company says, yeah, I've got this fellow and he's 99 years old and he's been here 100 years. And his severance is going to be for forever, and we can't afford to write that check, so we just keep him on and hope he retires. I can't tell you how many times I've heard that. It's always the bad decision. You need to lay him off or terminate him. You need to talk to your lawyer. But what you need to do is not expect that you're going to write a big check right away. You need to give them working notice, which is, hey, 100 years from now, your job's going to end. You're going to have your pay for that 100 years, and you don't need to come to work tomorrow. You can just stay home and be on call, and you're not going to have your emails or your phone or your access to the server and that sort of stuff. And so, again, this is jurisdictional, but you can't have bad apples or unproductive people around when you're trying to regain winning momentum in a troubled situation or create winning momentum in a startup entrepreneurial situation. You have to have productive people, and everybody who's not productive just drags the entire team down. It's a mistake not to make that change, and it's certainly a mistake to not make that change because you're concerned about the financial side of this. And then you would say, well, I didn't save overheads because I'm still paying this person every year for the 100 years in my crazy example. Yeah, that's the way it is. Okay, and that's why laying off people as a cost-cutting measure doesn't really work. It doesn't really work, but it's good for the organization in certain circumstances. You can account for it differently in a restructuring line. So it's kind of a normalizing entry, which we've talked about before, and we'll talk about again. The bottom line is the right decision is now. I've never once terminated somebody in my life ever, and I've terminated a lot of people. Not happy about it, but that's the job. I've terminated a lot of people, and I've never once in my thought to myself, geez, I wish I hadn't done that. I wish I'd waited 6 months. That's not the way it works. You always need to make change and move forward with an organization. Anyway, so that's what we've done. I like both of these people, and so what's going to happen? Well, what's going to happen is you go to even though if we went through a restructuring, they'd have nothing. You go to the lawyer and you say, what's fair? And the lawyer always gives you a range, right? And then I say, okay, well, somewhere within that range, and I say, that's what we're going to offer these people because we're trying to be as fair as we possibly can. And is that the high end of the range? No, it's not. It's at the lower end of the range. Is it the very low? No, I don't think so. But it's at the lower end of that range that the lawyer provides as being a fair settlement and a fair solution for these employees. Why the lower end? Because we can't afford anything different. And because if we went through a process, it would be zero. It wouldn't be the lower end, it'd be zero. Now, how many times when you're terminating people and you offer them a package, do they say, hey, cool, this is really generous of you. I'm not going to talk to my lawyer and I'm just going to be happy. How many times does that happen? None? Exactly. It just 0% of the time does that happen. So you always have to negotiate some. It doesn't mean you need to give in, but you have to have that conversation. And so both of these employees have come back with why our calculation is wrong. And I don't know, maybe they're right, maybe they're wrong. I don't know. My job is to evaluate and see what is fair. So I got to listen to what they have to say, maybe go back to the lawyer with that, see where I end up and get back to them. And I need to weigh that against the economic reality of should this company go through a restructuring and come out the other side way healthier. And these guys are going to be left behind, which is not a great solution for anyone. So what I'd rather do is come to a happy solution, an agreed solution right now along the lines of what was presented to them. So that will be an ongoing discussion. I don't know if there's going to be more. I have no reason to believe there is more of this, but we'll see. We'll see as we go forward. Really, at the end of the day, it comes down to productivity. Are people working and adding value to the organization? Okay, rep communication. So I told you there's a pool of reps across North America, well, Canada and the US. They haven't been paid for a long time. I think I mentioned this last week that my view on this, if you work for me, you ought to be paid. So I bought this in June. All commissions will be paid for June, and they're going to be paid for every month going forward. So I've told them that my priority is, number one, people have to be paid going forward because I divide the debt to these reps into two pools, one being the go forward when I showed up, and one being all the stuff from the back. And we can't afford to pay all the stuff from the back right now. And this comes back to just like the termination discussion. Should we lay these people, should we pay back severance in a big check? Should we pay it over time? Should we not pay it at all because it's an unsecured creditor and we could restructure it if we want to? So job number one is that. Job number two is to evaluate whether these reps are productive and useful. Because what happens is if you have someone who hasn't been paid for over a year, I think that's what it is, over a year, then they get a bad attitude about the organization, properly so. They're not selling for you, properly so. They're bad-mouthing you in the community. I don't mean my reps at Novanni in particular, but just in general, this is what happens with disgruntled people. They bad-mouth you in the community. They say these guys at Novanni got trouble and so on and so forth. And I don't blame them for that at all, right? That's just the nature of it. And salespeople, like sales reps, are they're emotional, they're passionate. That's why they're good at their job. I think we mentioned that last week. So, for example, I spoke with one of our reps, I think in Quebec the other day, and his position was, wow, I'd really like to work together again. I don't think you replaced us since we resigned, so pay us everything you owe from the back debt, and we'll be happy and productive in moving forward. To which my reply is, it doesn't really work that way. I want to know that we're productive and happy in moving forward, and then I'm going to come back to the back debt, right? And you would say to yourself, well, people deserve to be paid. Well, 100% they do. Damn right they deserve to be paid, which is why they're going to be paid going forward since I showed up. But again, the economic reality, the tough decision here is that we just can't pay everybody, and we can't pay everybody right now. We can't pay everybody. We will over time, I suspect. Or that's my hope out of this thing. That's the direction. But if we don't, or I should say, when we do, the order of priority is people that are working, right? And being productive. Because I need to focus resources on immediate resources on things that generate money, right? On direct materials, on supply chain, on reps that are productive, on employees that are productive, things along those lines. Every dollar right now that goes to stuff that isn't helping, to back debt, is a waste of a dollar in the turnaround of a business. You need to think about it that way. One of the most important things in persuasion, in negotiation, is to get attention, right? Because you can't sell somebody on something if they're not paying attention to you. Job number one in persuasion is to get attention, and you see that, well, you just see that in anybody who's effective at selling or negotiating. We talked about it, I think, last week I used the word triggers. And so how does that relate to these rep communications and the way I'm handling the rep channel? If I just wrote them a big check for all the back debt, do you think they'd listen to me going forward? I don't think so. I think they count their lucky stars that they got their cash when they thought they were not going to get their cash, right? Because they've already written it off in their minds. It's been a year being unpaid, for God's sakes. So if I just gave them a big check, then what happens? What happens is they go along their merry way. There's no scenario where they come back and say, thank you so much. That was awesome. And now I think you're the best guy on the face of the earth, and let's work together. That's not happening, right? That's not happening at all. So we need to have their attention. We have their attention. We now need to evaluate who's a good rep and who's not a good rep. And then we need to evaluate what we're going to do about this big problem of this big back debt that's due. And we need to do it in order of priority, being who's on the bus and who's not on the bus. Okay, my view of that situation. What else happened this week? This was interesting. We had a customer, a really good customer, who, after a reconciliation process on, actually, as we're talking, I'm going to check my emails here and see if I've had a response from them for a cool update. I do not. Okay, let's carry on. So they put us through a big reconciliation, accounting reconciliation with their team to figure out rebates for the last year. Don't hold me to the details because I've been here 3 weeks. I don't really know the true details of it. But the bottom line is, so they're a customer of ours, so we bill them, and then we're supposed to write them a check for rebates, which we apparently did, and now there's a reconciliation, and now it turns out on the reconciliation that we overpaid them, and they should be sending some of that money back. It's not a lot of money, okay? It's just over 5 figures, in the low 5 figures, as they say. So it's not a lot of money. They're a great customer, and they're a good account, and both accounting departments reconciled this, and it is agreed that this customer owes Novanni this money. And what did this customer say? This customer said, I'm not paying. Just not paying it. I'm not paying it because we're pissed off at you because you never pay the rebates to us on time. Your house is not in order. They didn't say those words, but the accounting department doesn't work. And, we have to hound you. We have to try and collect to get the work done. And you never pay us on time. So we're imposing a penalty on you. And the penalty is we're not paying this. So they don't have a contractual right to that. Are they out of money? I don't know. I've had a couple conversations with them in the last week by email. And my gosh, they're extremely frustrated. Now, the story I'm getting from Novanni is not the same story as what I just told you, which I'm getting from the customer. Novanni has their own version of events. As you can imagine, both parties always have different versions of events. But what I said to the customer in email was, I'll accept. I just accept your version of events. And if you were in my shoes, actually, I said, I'll accept your version of events. And if I had experienced the same fact set that you've described to me, I would be super pissed off, probably more than you are pissed off with this. But that doesn't make it right that you can just impose penalties willy-nilly and not pay us our money. Because what that causes me to do is think that you can bully us, think that you're not going to pay the full account, and that you don't want to be a respectful partner going forward. And that's what's going through my mind. And so I've proposed a solution for reporting and dealing with these where they'll never have this problem again. But what I really did on top of that is I put them on credit hold immediately. So we've got a bunch of things in production. We've got orders that are supposed to be shipped, and I'm not doing it. I'm not doing it until they pay their bill because she's calling it a dispute. I said, this is not a dispute. Both accounting departments agree what the number is. Everybody agrees you owe us this money. You've just come up with this concept of a penalty outside the bounds of our contract, and you're calling a dispute, which is not what it is. This is a credit default, is my view. Am I doing the right thing? I don't know. I honestly don't know. Here's what I do know. When you're a troubled company, you get in the habit of losing. And this whole show is about winning momentum. Well, when you're losing, you accept these sorts of things as, yeah, I'm a fuck up. Like, everybody in this organization is a loser. We're screwing things up. And this is just the price we pay. Okay. And that feeds upon itself. And if you start standing up for yourself and you start winning, and I don't mean winning meaning the other person lose, I just mean coming to a fair solution, getting what you deserve in a transaction, right? We're not making something up. We're just collecting something that everybody agrees, even the other side agrees, was due to us. And when you start winning these little battles, your entire organization starts, it becomes exponential. The entire organization starts feeling winning. They become more confident. When they're more confident, they're happier, they're productive, and they start coming up with creative ideas. It just feeds on itself, and it's so important. How much do I believe this? I believe this so much that I'm willing to lose this account over a small amount of money just on the principle, because we can't be bullied around. This is a new day for Novanni. We're going to do our job. We are doing our job. We're pushing forward, and we need our stakeholders to behave accordingly and to change their view as to who we are and what we stand for. So that's why I'm doing that. I don't know if it's the right decision. I don't know if I'm handling it the right way. It feels right to me. And I think it sets the table, hopefully, for a productive discussion. I have their attention, right? I definitely have their attention. There's a bunch of orders that aren't being shipped. I've communicated that we're not going to be beat up and that we need to be treated fairly and as a reasonable partner, and we'll see what happens. It's an important issue to me. What else do I have here? Freight. We own another company, Roofers World in Ottawa, which we've done a show on before. We continually go through a freight analysis because that's a big deal in these manufacturing businesses and supply chain in general. And so I've had the people in Ottawa talking to the Novanni people, and the bottom line is they came up with a hybrid solution that saves 5% on the freight at Novanni, which is cool. Here's the message on this. When you're running a business, what happens is it's hard to find supply, right? You have to go out, you have to see who's the best supplier to my business. You're getting salespeople coming in. You're looking on Google for who sells that particular type of widget, and you come up with a deal. You negotiate your credit, and you build a relationship. 100% of the time, when we walk into a troubled company, the view of management is that whoever supplies this widget, widget A, widget B, widget C, those suppliers, they're the only people on the face of the earth that could possibly supply that thing. It's the best deal by far. 100% of the time, that's what they tell you, okay? What you need to do is revisit your entire supplier base annually. It's almost a full-time job. If you're in a smaller business, if you're entrepreneurial, you can't afford to do that. I have never once sat down for a negotiation with my freight suppliers in any company and not gotten a better deal. I've never not gotten a better deal. It's kind of a made-up number. The pricing, I mean. There's different solutions, and you can go to market, and it turns out someone else has got a return leg, for what you're looking for on a regular basis. There's now online systems. So let's not focus just on freight. Everything you do everything you buy should be revisited regularly. You should look to go to market with an RFP if you're large enough to do that. But you need to be talking to competitive and redundant supply to constantly keep your costs down. Because even if you don't get a cost reduction, even if you're going through that annual review, let's say your price goes up 5%. I promise you that if you hadn't done it, your price would have gone up 20%. All right. You don't lose by saying, hey, let's sit down. Let's talk about this relationship. I'm looking for better efficiencies. I'm looking for better prices. I'm looking for better credit. And if I don't think I know where I'm going with this, I just want to go to market and see what the market tells me. And I promise you, this is going to do a lot to control and save your costs. All right, enough about Novanni. What else do I have for you for this week? We're 36 minutes in, so I have some time. I talked about someone I called Mary last week, who called me with an entrepreneurial issue and a partner that she was offside with. And so that story continued this week. She agreed to a meeting with her partner and her partner's sister, who helps to look after I don't know what the scenario is, but the partner's sister, the relevant part of this, is a lawyer, not a business lawyer, a lawyer in another type of practice. But what they did is the two sisters had Mary show up at their office for a negotiation session. And so basically they called in this poor young woman unrepresented into a lawyer's office and tried to beat her up in terms of a negotiation, tried to bully her in terms of a negotiation, which is just, it's one of two things. Either the sister who's a lawyer is also a principal in this situation and therefore owes money to Mary, or she's a lawyer just helping out her sister, in which case I had a serious problem with the ethics of dragging in the opposing party unrepresented and trying to run circles around them. So Mary came back to me to talk about this, and as I said, the number one job in persuasion and starting a negotiation is to at least have someone pay attention to you, try to set the table at the same time if you can. I talked last week about the idea of a demand letter to them, and so that's exactly what we did. I agreed to get on board with this because she seems like a nice person. I want to help her out. And so the scenario, if you didn't watch last week, sorry, my machine is beeping at me here, driving me nuts. The brief story from last week is you had two partners start up a retail organization. They've both put in about $80,000 so far out of their pocket, but this woman Mary put in another $80,000, of which 20 was paid back, so now 60, which she borrowed from somebody else. So she's in for about 140 in total, and the company just bumps along, and the partners they can't get along. They have no strategy in the business. They need to split up for whatever reason. It doesn't really matter. There's no shareholders agreement. When Mary put in her $140,000 now, there was no documents, no loan agreements, no shares issued, nothing. So technically they're just advances to the company and it's debt due. And so, the partner's trying to buy her out for some little bit amount of money, like $10,000 or $20,000. There's no number on the table, but you can see that's where it's heading, which is just ridiculous. And Mary would be a buyer at that price. So what have we done? I served a demand letter. I gave him 10 days, paid the $140,000. The demand is on the corporation, of which Mary is president and the partner is vice president. And it's on the two sisters, the partner and her lawyer sister. And I gave him 10 days. I said, pay the $140,000. Now, would I negotiate on that? Yeah, of course, because I don't think, and I said, after the 10 days, you don't pay the $140,000, then we're going to exercise our rights. And what are the rights? Well, it's probably shutting the business down and liquidating things, and for the benefit of all creditors, and we see where we end up. Now, would we negotiate on that? Yeah, of course, but what we can't have is them dragging Mary into a lawyer's office unrepresented and try to get her to agree to some sort of very small amount of money over a 3-year time period. That's inappropriate. It's probably unethical, and we need to change that discussion. It needs to be above board, it needs to be ethical, and it needs to talk real numbers. So more to come on that one. And the message out of there, by the way, is you have to have their attention, which is what the demand letter is for. and I have other ways up my sleeve to make this real. And you need to, from Mary's perspective, understand what hat you're wearing, as I always say, because in this situation, she's an employee, she's a director, she's a shareholder, she's a founder, and she's a creditor, okay? And all of those things, apart from the founder, which is a made-up title, but all of those things have different rights and responsibilities, obligations, and you need to treat them separately. You can't give up your creditor position because you're a shareholder or an employee. You need to think about these separately. And if you or Mary were only a lender to the business and not an employee and a shareholder and a director, you would do exactly what I did. You would say, give me my money back. I loaned you $140,000. The rest of this is your problem. I loaned you $140,000. I'm demanding repayment. That's all we've done. The only confusing part to Mary and to anybody inexperienced in these situations that were to look at this is they would start commingling all those roles, and that's a mistake. If you were just a lender, you would ask for your money back. That's all we're doing. All right, how are we doing on time? We're good. CBD hemp testing. You know, on this show, I'm in the hemp and cannabis business from time to time, and just had a funny, an interesting thing came across my desk the other day. I don't even know where it came from, but the FDA, so the U.S. Food and Drug Administration, just issued a report to Congress outlining the results of sampling tests included on CBD products. So they looked at 200 products that are sold online, and they checked out their labels to see what was in them, and then they tested to see if what was really there matched the labels. What do you think the answer was? Anyone? Not even close, right? So out of 102 products that actually said something about what was in it, because you buy a bunch of CBD, whether hemp or cannabis-derived product, it doesn't even tell you what's in it. So out of the 100, so half, 102 out of 200 actually had an ingredients list, or it's not really ingredients, it's more of a percentage, CBD, THC, whatever else is in this product. So out of 102, 18 of them contain less than 80% of what they said they did. So you think you're getting this CBD and you're getting 80% or less of that. And 38 of them actually had a lot more than 120% of what they said they did. In other words, there's no quality control at all. It's all over the map. So half of them don't give you any ingredients list or percentages of what you're taking. And of the half that do, more than half of those were just wrong. They weren't even close, like within a 20%. Well, that's 40%, 20 in each direction. Variance. 2 out of the 102 were found to have 0 CBD in them. It was just made up oils of other stuff. So that just made me laugh because it's so obvious, right? Anybody who really thinks about this industry would know that. So I get some CBD product in Canada from time to time. I don't take it religiously, but I tried to just see what it was all about. And my wife here is super into nutrition or organics and understanding what she puts in her body. I mean, I'm the guy that would go to A&W or McDonald's and grab a burger and fries. I also love my high-end steakhouses, don't get me wrong, but she's vegetarian. She wants to know the source of all her food. She's created a big garden here, and she's growing all of our things, which is amazing. And so she's interested in CBD because she comes from that kind of culture. The alternative medicine culture is what I'm trying to say, not smoking weed culture. And she's interested in that. And every time I come home with a bottle, excuse me, from somewhere, she grabs it and she reads the label, which tells her nothing and is very frustrating to her. And she researches on the internet that brand and what goes into it, and what does she find? Nothing satisfactory. It's very frustrating, and so she refuses to touch it, even though she's dying to try it. She really is, but she can't get a chain of I don't want to say chain of evidence, but there's no ingredient label, and there's nothing to back up the ingredient label if it did exist, and there's no dosage information. That's the other thing, because you get this stuff, You don't know how much you're supposed to take. Like it's just completely random. You don't even know really why you're taking it. Inflammation, broadly speaking. I can't sleep, broadly speaking, right? Nerves, broadly speaking. But there's no prescription for that, like an over-counter kind of recommendation. Don't take more than 2 of these. It doesn't tell you any of that. And how could it tell you any of that, since what's in the bottle bears no relation to what you think is in the bottle, which the FDA study just proved. So why am I telling you this? Well, because we talk about cannabis sometimes, and I think we've touched on this topic before. But here, let me ask you a question. If you started a CBD company, so you're delivering just oil, let's just make it simple. We don't need to get into edibles and creams and all that sort of topicals. If you were just delivering ingestible CBD oil and you're targeting inflammation or whatever ailment it is, and you were able to provide lab-tested strength and ingredient lists, so from time to time you pay a lab yourself to come in to test your product and to publish it, make it available on your website. If you were to find some studies or create some studies that told people, here's the dosages that you ought to be taking, here's the percentage in concentration and strength that you ought to be taking, and here's the way to go about it, here's what we recommend. And that was, relatively third party, even if it wasn't scientific, but it was third party and it was on your website, and you turn this into a service rather than just a random bottle in a gas station in Ohio, right? If you turn that into a service, don't you think you'd win that business pretty quickly? I think you would. We started a business, we tried to fund and start a business that was doing exactly that about a year ago, and it never got off the ground for a number of reasons. But this comes back to this idea of getting your house in order, right? If you had the paperwork, if you had the paper trail, if you had the evidence, if you have the backup, and you made it available to people, in this case to your customers, that this is what you're doing, I think you dominate that space. And this entire industry, one of the reasons it struggles is it doesn't do that. In my personal view, I don't know how you create a brand on product that is all over the map and not controlled. All right, I missed the topic last week, and I'm 48 minutes in, so I'm not going to do it again this week. So we'll just pass on that. And I have nothing else for you, I don't think. So that's the show for today. Thank you for listening. Cheers again. This has been Martinis with Scott, a show about winning momentum in business and in life. Please subscribe. We are on YouTube, Spotify, and Apple Podcasts. Thanks. We'll talk to you next week.